Hey everyone, welcome back to Dinar Scope, your trusted source for the latest updates on global currency moves and real-world financial changes. Today's story is one that's sending shockwaves through the Dinar and Dong community. Chase Bank ends Dinar and Dong exchanges, how this affects your money in 2025. If you're holding Iraqi Dinar or Vietnamese Dong right now, what I'm about to tell you could completely change the way you look at your investment. This isn't rumor or hype. This is an official policy change from one of the largest and most influential banks in America. And by the end of this video, you'll understand exactly what's happening, why Chase made this decision, and how it could impact your money in the months ahead. This week, Chase Bank issued an internal memo that has quickly made its way through the financial world, and it's creating serious concern among currency investors. The memo outlines Chase's updated policy on exotic currencies with a clear focus on the Iraqi Dinar and the Vietnamese Dong. For years, Chase had been unpredictable when it came to these currencies. Sometimes they allowed exchanges. Other times they didn't. Many investors walked away confused and frustrated. But this new announcement changes that uncertainty into a firm stance, effective immediately. Chase Bank will no longer exchange Iraqi Dinar or Vietnamese Dong at any of its branches across the United States. That's a massive shift. This decision instantly changes how accessible these currencies are to the public. For many years, investors assumed that even if smaller dealers disappeared, big banks like Chase would still offer a safe and reliable way to exchange their holdings. But now, that safety net is gone. Chase's move signals that large banks are tightening their approach, and that could reshape the entire landscape for exotic currency investors. So why did Chase make this move? The reasons are layered, but they all come down to one thing: risk versus reward. The bank cited the extreme volatility of these markets, where sudden swings in value make it nearly impossible to guarantee stable transactions. On top of that, regulatory compliance has become tougher than ever. Financial regulators are demanding higher scrutiny on currency exchanges, and for banks, staying compliant is expensive. The profit margins from exchanging currencies like the dinar, the dong just don't justify the mounting costs and potential liabilities. It's not just regulation either. Processing exotic currencies comes with significantly higher fees compared to mainstream ones like the US dollar, the euro, or the British pound. When you combine market volatility, expensive compliance requirements, and high transaction costs, it becomes clear why Chase's leadership concluded that continuing these services simply isn't worth it. If you were planning to exchange your dinar or dong through Chase, your options have now narrowed dramatically. While that doesn't mean your currencies are worthless, it does mean that liquidity, or your ability to easily convert them into cash, is becoming a real concern. Chase now joins a growing list of major banks, including Bank of America and Wells Fargo, that have already stopped dealing with these exotic currencies. The message from big banking is loud and clear: these are no longer currencies they want to handle. This shift matters because for a long time, many investors believed they could walk into a major bank, hand over their dinar or dong, and walk out with dollars. That assumption is now outdated. If you haven't looked into alternative exchange options yet, it's time to start before you find yourself stuck without a plan. For most people, local currency exchange shops in big cities are still an option, but they often offer much worse rates compared to banks. Some online dealers continue to buy and sell dinar and dong, but that space is filled with scams and shady operators. Many of these websites promise guaranteed buybacks or special exchange programs, but they often ask for upfront fees or personal financial data, and that's where investors get burned. Smaller credit unions could be another path, as they tend to be more flexible than the big banks. However, even these institutions are starting to pull back. They're now adding higher fees, stricter verification, and limited transaction amounts to stay compliant. If you're thinking about using a credit union, don't assume past policies still apply. Always confirm your current stance before making any moves. Experts across the currency market see Chase's decision as part of a much bigger trend. Major banks are retreating from exotic currencies altogether, choosing instead to focus on mainstream high-volume ones. Analysts say this is a response to rising compliance costs, volatile market conditions, and tighter government oversight. For banks, the risk of being penalized for mishandling currency exchanges is just too high. So what should investors do now? First, don't panic, but don't ignore this either. Take the time to research every legitimate exchange option in your area. Compare rates, check reviews, and make sure the dealer is licensed and transparent. Even a small rate difference can make a big impact if you're holding large amounts of currency. Keep in mind, too, that some smaller dealers might offer convenience but charge excessive fees or have hidden markups. Always read the fine print. For those with larger holdings, exchanging smaller portions over time could reduce your exposure and help you get better rates, especially as fewer institutions are willing to handle large transactions at once. Record keeping. It's another big piece of the puzzle. Always document your purchases and exchanges. This not only helps with tax reporting, but also protects you legally if you ever need to verify the legitimacy of your funds. Many investors overlook this part until it's too late. Don't make that mistake. And here's a major warning. The rise in online scams is real. Websites claiming to offer special buybacks or priority exchanges are popping up everywhere. If a platform requires payment up front or asks for sensitive personal information, treat that as a red flag. Real dealers are transparent and follow proper legal procedures. Your best defense is knowledge and skepticism now. Stepping back for a second, Chase's decision is more than just a policy update. It's a wake-up call about the true risks of exotic currency investing. Many people have focused on the dream of potential gains, but very few have thought about the real-world logistics of converting those currencies into cash. Without reliable banks participating, the path to liquidity becomes narrow and uncertain. We're already seeing real examples of this play out. One investor in Texas reportedly tried exchanging 10 million dinar at 3 different Chase branches. All 3 refused and cited the new policy. He eventually sold to a local dealer, but at a rate 30% below market value. Another investor in Florida faced the same issue with her Vietnamese Dong, holding it for years only to discover Chase wouldn't process her exchange at all. She ended up going online, paying higher fees, and losing a portion of her expected return. Stories like these are becoming common. Dealers are now offering lower buyback prices, and the spread between buying and selling has widened significantly. Some dealers are even exiting the market entirely, calling it too risky and unprofitable. That makes it even more important to plan ahead before trying to cash out. Looking forward, the future of these currencies remains uncertain. The Iraqi Dinar continues to attract speculation, especially as Iraq works on stabilizing its economy. But issues like political instability, corruption, and dependence on oil revenue keep investors cautious. The Vietnamese Dong, on the other hand, is tightly managed by its government to maintain export competitiveness, which limits any dramatic appreciation. From Chase's perspective, this decision wasn't made lightly. Banks employ analysts who study global markets in depth. Their collective judgment suggests that the upside potential for these currencies doesn't outweigh the operational risk. While it doesn't mean the dinar or dong won't ever rise in value, it does mean converting them into spendable money will now be harder than ever. If you're holding these currencies, the most important thing right now is to have a clear exit strategy. Waiting for a major revaluation or RV without knowing where or how to exchange could leave you stuck. The infrastructure of banks and dealers handling these currencies is shrinking fast. Even if values rise, turning those paper bills into real dollars may take more effort and cost than many investors expect. The smartest move today is to stay proactive. Research local dealers, explore smaller financial institutions, and verify all rates and fees up front. Comparing multiple sources before making a decision can save you from huge losses or unnecessary stress later. In this environment, patience and preparation are your strongest tools. At the end of the day, the key takeaway is simple. Exotic currencies carry risks that go far beyond market prices. Access, regulation, and liquidity all matter just as much as potential profit. Chase Bank's latest move proves how fast those factors can change. Being informed, cautious, and adaptable is the only way to protect your investment. in this rapidly shifting market. So there you have it, the full story on Chase Bank ending Iraqi Dinar and Vietnamese Dong exchanges in 2025. This is a major development for anyone involved in exotic currencies. Now more than ever, planning your next steps, verifying your options, avoiding scams are essential to keeping your money safe. Share your thoughts or personal experiences in the comments below. Other viewers need to hear what's really happening out there. And if this video helped,